UPS just reported their earnings, and we see the prices selling off on the news. Let's get into this article before we continue to get into the analysis. Um, this article is coming from Investors Business Daily. US UPS stock skids as labor deal details trim shipping giants outlook. So they reported a mixed second quarter, announcing its recent labor deal could reduce 2023 revenue. Ahead of Q2, analysts rang warning bells on a recent reached labor deal, which averted a potential strike. Now, I was paying attention to this because UPS has over 300,000 workers. They handle roughly 22 million pieces of parcel a day in America. They handle roughly a quarter of all shipments in the U.S. So this was a big deal. But and going back to the prior strike, which was in 1997, that was the first ever strike in the company's history. That was 15 days. For the quarter, instead of making a profit of 340 million, they lost $10 million at the time. And then also revenue tumbled 14% to 4.8 billion from 5.59 billion. So this was a big deal. They would have went on strike, and now things are even worse today. You know, we're talking 20 plus years ago. Everything is digital, a la Amazon. So this was a big deal. July 25th, UPS announced the deal with the International Brotherhood of Teamsters on a new 5-year contract. Some of the specifics under the proposal, full and part-time union workers will get $2.75 more per hour in 2023 and $7.50 per hour more by the end of the 5-year contract. So this in itself is why Wall Street's saying that their earnings are going to take a hit because of the labor cost. So getting into the quarter, UPS sales in the U.S. fell 7% in the quarter. The company said this was driven by a 10% decrease in average daily volume. Internationally, sales decreased 13% due to a 7% reduction in average daily volume and continued softness on Asia trade lines. The company's full-year outlook is now taking into account the volume impact from labor negotiations and the costs associated with the tentative agreement reached with the International Brotherhood of Teamsters. So like FedEx and Caterpillar, UPS, another global economic barometer. 66% of GDP is based on consumers really buying stuff. And how do you get that stuff? Well, it has to be shipped. And so if these companies are not doing well, that kind of gives you an idea of the economy overall. Now here's what analysts think. Credit Suisse downgraded UPS to a neutral rating after UPS announced the deal. However, the brokerage also raised its price target to 204 from 200. That would be about 10% above current prices. Stifel on July 26 raises UPS stock target to, again, a little over $200. Maintain a buy rating. The labor deal is a win for both organizations. The firm added that wage increases will be a modest headwind to earnings. Okay, so Stifel's saying don't sweat the labor costs too much. All right. So regarding the charts, we're going to start with the daily chart, weekly, monthly chart. And we could definitely see some support down in this 160 area. We can see some short-term support down at the 165 area. And you can see since reaching a high in February 2022, prices are just making lower highs. All right, let's go down to the weekly chart. You can see these buying wicks as a short-term support. longer term support. Now when I look at the price, it's kind of within this range. When I look up into the left, I actually see two weekly sellers levels. You got one here, and on top of that you have another one here. Now meanwhile, analysts have their targets above 200, but in order to get through into that $200 level, it has to get through these strong sellers level. Let's put in weekly sellers. What price are we going to say? 198. And we're going to have another one at, we'll say 195. All right, let's go down to the daily chart. And as you can see, price is selling off, and now if prices were to close the trading day today, it would be below all the moving averages, which would then serve as dynamic resistance. Looking at current price, and I'm going left and down. Really don't see any levels of interest. You know, these are your two extremes. You want to play the range. Anything in the middle is going to be choppy. Yeah, this is just a wait and see, and that's what trading's all about. It's a wait and see game. You know, only take the setups that meet your trading plan or higher probability setups. You know, put an alert at 190 and at 165 on your platforms. You get to those areas. If price gets down here to the 165, 160, that would be an opportunity to go long. You get back up to the 191, 200, that would be an opportunity to go short. So that's it for now. Thanks for watching. Subscribe. Please like the video.